In 2017, Bitcoin reached an all-time high at $20,000 per coin before shortly after losing more than 50% of its value in 2018 to $3,000 per coin. It's not very clear to me why Bitcoin lost so much of its value in 2018, but I do believe that the Bitcoin bull run in 2017 is largely fueled by individual investors. Now fast forward from 2018 to this year, Bitcoin reached an all-time high at $40,000 per coin before shortly declining to $33,000 per coin. But this Bitcoin bull run seems very different. So in this video, I want to talk about what's different about the Bitcoin bull run this time and my observations on the likelihood of another 2018 Bitcoin crash. As usual, this video is not financial advice or recommendation for you to do anything. It's just general information for entertainment purposes. Now, because I'm not a professional, the only thing I'm qualified to recommend you to do is just to gently smack the like button right there if you do learn something new. And don't worry, I'll wrap up the video with a portfolio update. So, without further ado, let's go. I wasn't always convinced about Bitcoin. When I was wrapping up my undergrad, Bitcoin was still incredibly new, and the perception of it was just to facilitate illegal transactions. The reason against Bitcoin is still relatively the same after all these years. It doesn't produce any cash flow, it's not productive, and it's volatile. But I have to say, a lot has changed since the 2018 Bitcoin crash. Now, Bitcoin as of 27th of January 2021 became the 12th most valuable asset in the world by market cap. It passed the banks and it's almost as valuable as some of the biggest companies in the world. But when you compare Bitcoin with gold, it's not even remotely close to gold's ginormous market cap. And if you look at the performance between Bitcoin and gold, it's fair to say that they are two worlds apart. Bitcoin in 2020 generated more than 300% return, whereas gold generated a little bit more than 15%. Wait, there is more. ARK Invest in their 2021 Big Ideas presentation have shown that the proportion of people hodling for more than 1 year have grown quite substantially over the years compared to the group of people that's holding Bitcoin for less than 1 year. That on its own is demonstrating maturity and conviction of Bitcoin amongst investors. And then there is the change in institutional sentiment in 2020, which I think is a key ingredient that was missing for Bitcoin to become a legitimate asset class. Last year was really tough. Interest rate is close to zero, and central banks pulled out their money printing machines and they made it rain. Now don't get me wrong, central banks had to do what they had to do in order to help us weather through the storm. But it created this massive problem where institutional investors and billion-dollar companies have to rethink where they put their cash, since short-term bonds are basically yielding nothing and inflation is just melting the cash away. So then the question is, what options do you have? The idea here is to put cash in a place where it's uncorrelated to the stock market, it returns more than inflation, and is liquid enough so that the money is readily accessible. And then something magical happened last year. Billion-dollar companies like MicroStrategy, Square, and some of the hedge funds have decided that amongst the other options out there, Bitcoin was a viable option to preserve the purchasing power of their cash. And to me, that completely shifted the idea of Bitcoin being a speculative investment by individual investors to a safe haven asset for institutions' cash reserves. MicroStrategy, which is an enterprise software company, put $1 billion into Bitcoin last year, and this is what their CEO said about the change in institutional sentiment.
Bitcoin's the world's first engineered safe haven asset, and it's running on the world's first digital monetary network. I mean, everybody in the world, every institutional investor is looking for a safe haven, and they're all losing faith in gold, and they're losing faith in sovereign debt as a safe haven. So Bitcoin is sitting at the right place at the right time. It's very appealing to anybody that wants to preserve shareholder wealth. And since March, we've had Paul Tudor Jones and Stanley Druckenmiller, and we've had Bill Miller, and we've had Rick Reeder, and we've had Guggenheim, and we've had Skybridge, we've had MicroStrategy, we've had Square. We've got an avalanche of billion-dollar entities coming into this space, and they're not here to speculate on leverage with an uncorrelated asset. They're here because they want the world's best safe haven investment-grade treasury reserve asset. So as the institutions buy Bitcoin, its volatility changes and the characteristics of the asset class are maturing.
And that was the moment for me to rethink about Bitcoin as an asset class.
Since my undergrad education kind of hammered the idea of Bitcoin being purely for illegal transactions.
On top of that, I was captivated by the utility of Bitcoin for cross-border transactions. For example, cross-border transactions are really expensive because of the currency conversion. So for a developing country, they might have to take their local currency, convert it into US dollars, make their transaction, and then convert that US dollars back to their local currency to use that money. But with a Bitcoin blockchain, that transaction can be done with a really low fee, and it doesn't take days for it to settle. You can actually see the evidence of utility of Bitcoin via the adoption rate by the country. Or you can take a look at how the peer-to-peer Bitcoin exchange volume have grown amongst these countries over the years. So the combination of change in institutional sentiment and also the utility of Bitcoin, I decided to dedicate 2 to 3% of my portfolio in Bitcoin since September last year. And I entered the Bitcoin market at 11,000 US dollars per coin. In the video I made for my patrons, and shout outs to them, I talk a little bit more about the idea of currencies and the characteristic differences between gold and Bitcoin. If you want to support me continue making great content for you, not to mention additional content pieces, and be part of my fortnightly Q&A, the Patreon link is in the description box below. Also, if you're really interested in the technology behind Bitcoin, I have put the original white paper in the description box below as well. Now the final question is, Bitcoin rallied hard into 40,000 USD per coin in early January before shortly correcting back to 33,000 per coin. So is there going to be a similar Bitcoin crash like the 2018 era, back down to like 3,000 USD per coin? Now personally, there's no way to know whether something is going to crash or not crash. It's all a matter of probabilities. Last time, the 2017 Bitcoin bull run and the subsequent crash in 2018, I believe is largely fueled by individual investors. But this time, the Bitcoin bull run, I believe, is fueled by institutional investors and regulators' acceptance of crypto assets. Beyond the institutional investors I talked about earlier in the video, the largest asset manager, BlackRock, have taken its first step in adding Bitcoin futures as an eligible investment to 2 of its funds. And this is the first time that the money manager is offering their clients exposure into cryptocurrency. At the same time, it seems like university endowment funds have been slowly adding Bitcoin to their portfolio as well. So because of the shift in institutional and regulatory sentiment, I think a Bitcoin crash back down to 2018 lows is the probability, I think, is close to 0. Because for that to happen, you need an alternate asset class with a similar risk to reward ratio for these funds and asset managers to rotate out of. The money, especially in this large of a quantity, it needs to go somewhere. It doesn't just disappear overnight. Then again, it's perfectly reasonable for a correction to happen, since the price increase earlier this year was just so sharp, and it already did from 40,000 to 33,000. As it stands, Bitcoin fits my investment thesis while giving me great upside and very limited downside. So I decided to dedicate a portion of my portfolio towards Bitcoins. Now, just a quick portfolio update. As of recording this video, my CMC market side of things is worth about 72,700 Australian dollars. I did get my Tauga shares as part of the share purchase plan, but I only got half of what I requested for. So I have quite a bit of cash I need to deploy in the next couple of weeks. And if you haven't seen my GameStop video, I highly encourage you to watch it towards the end, because I talk about why I think this whole GameStop saga is going to trigger a correction. With my stake portfolio, it's currently worth about 36,000 US dollars, which is give or take approximately 46,000 Australian dollars. And I'm just holding on to this cash at the moment because I'm gearing up to go hunting in the upcoming weeks, and I haven't made any changes on this side of my portfolio. As usual, I'm not sponsored by Stake, but if you do want to try Stake for yourself, I've left the link in the description box below. Thank you so much for watching this video all the way to the end. If you have learned something new, consider gently smacking that like button right there, subscribe to my channel, and click onto the bell so that when I release future videos, you'll be the first one to know. Until next time, my name is David. Otto will always do the honors, and see you very, very soon.